Hey guys, welcome back. This is StockBroc. Today I am going over the 2025 quarter two earnings for NVIDIA. Kind of break it down why the stock is down in after hours and kind of go over it real quick. So they came out with quarter two earnings for 2025. Stock is down 3%, about $5 in the after hours, down to about 175. The headlines are glowing. Real story might surprise you just a little bit. Today, I'm going to be breaking it down, spotlighting what's working, what's not, and why rising competitors could threaten its runway growth in the future. So, NVIDIA posted a revenue of $46.7 billion, up 56% year over year, crushing Wall Street's forecasts. Earnings per share came in at $1.04 or $1.05, depending on the source, both beating projections. Gross margins came in strong at 72.7%. They did compress a little bit. That was something notable in the earnings. The company gave bullish quarter three revenue outlook of $54 billion, which represents single digit growth, which is also a concern. Actually, no, they just posted single digit growth since the first quarter to this quarter. I think it was mid-single digits. Not sure what it will be for, so say if we posted 46.7 billion, maybe that would be close to 10%, something like that. A massive $60 billion share buyback signals management confidence in future growth, so that is good as well. At least they're spending some money on investing in the business. That was good. Highlighting the good. Demand data center revenue soared 56% year over year, showing AI hardware still drives demand. The new Blackwell platform is ramping up fast with strong market interest. NVIDIA also retains dominance. Their chips power more than 80% of global AI training workloads. Also, let's point out the bad, soft spots, and concerns. Despite outsized growth, momentum is slowing, now around 50 to 55% year over year. Revenue down from triple digits last year, but that just makes sense. Law of large numbers, eventually company growing at 100% is going to slow down at some point, so that's not too much of a negative. Semi-analysts flagged weaker than hope data center acceleration, enterprise demand, and especially from US cloud giants, showed a few cracks. So that was something you might have to do a little bit more of a deep dive on, something I noted in the earnings. No China sales for H20 chips this quarter, and guidance excludes China, a key market that remains uncertain due to regulations and competition. Let's point out some risks and opportunities looking forward. Supply chain risk. NVIDIA is reliant on Taiwan Semiconductor, adding geopolitical uncertainty. Valuation risk. Despite growth, shares are a bit pricey. Some say overvalued given decelerating growth. Environmental and regulatory risk. The massive energy use of AI workloads could become a headwind in the future. The opportunity. NVIDIA's developer ecosystem and stack innovation makes its moat hard to assault. But the risk, global AI chip competition is heating up with AMD, MI400, Intel, Gaudi 3, and cloud giants like AWS with their Trainium and Google with their Ironwood are racing to close the gap. In China, local players supported by Alibaba and Huawei are starting to eat into NVIDIA's dominance, showing the decelerating growth. But these numbers are still good, don't get me wrong. But at some point, we're not going to be growing at a 50% rate. And as you can see, growth is decelerating, and we are down to single digits for the quarter, from quarter one to quarter two. The growth paradox, competitors are on the rise. Growth is catching up to them. After 2 years of explosive expansion, NVIDIA's numbers, while impressive, are now in line with industry giants. Not in a league of their own, as they were at one point. They are still growing at a massive rate, but you just gotta be realistic at times. As AI matures, market share is likely to decline, from its current 85 to 90%, even if demand remains high. Investors should watch for aggressive moves from competitors and regulatory hurdles that could reshape the landscape. Alright, so that's NVIDIA's Q2 earnings in honest detail. There are some things that you need to go further in on and do your own research on, but facing those growing pains, is this company still worth the premium, or are competitors finally catching up? Drop your takes in the comments, like, comment, subscribe. This is StockBroc. Appreciate you watching. Peace out.